The silver squeeze, as we've discussed before, or what's commonly called the silver squeeze, which is millions of retail buyers buying silver and adding silver to their portfolio, has been important, I think. But the real silver squeeze, from my point of view, comes about when the largest institutional investors in the world recognize that the 40% of their portfolios that they have involved in debt instruments needs to be changed. 40% of institutional portfolios aren't performing, and the institutional managers are going to need to change their investment behavior. And I believe that some amount of that money will find its way into the silver market. And I don't think that there is sufficient silver, or certainly silver equities, to satisfy that demand. Specifically, and we've talked about this before, the market share of precious metals and precious metals related assets in the United States market for savings and investment is less than 0.5%, which is to say 0.5% of the savings and investment assets in the United States market are made up of precious metals and precious metals related securities. Historically, the mean valuation of precious metals and precious metals related assets, or put differently, the market share, has been between 1.5% and 2%. At the very least, over the next 5 years, I think that precious metals will return to mean, which means that demand for precious metals and precious metals related equities in the United States market, the most important savings and investment market in the world, will triple or quadruple. In my heart of hearts, I don't think that we're going to have reversion to mean. I think that we're going to overshoot mean, but I don't need to overshoot mean to make my case. A circumstance where the Harvard University Endowment, the Stanford Endowment, Teachers Investment and Annuity, the Saudi Sovereign Wealth Fund, the Chinese Sovereign Wealth Fund, Norges Bank, to the extent that the largest institutional investors in the world increased their holdings in precious metals from 0 to their 3-decade mean, would lead to a tripling or quadrupling of demand for silver. And that would be a real silver squeeze, a real silver squeeze, a squeeze of a dimension that I don't think that we have seen since the 1970s, a squeeze that would in fact put the efforts of the Hunts in the 1970s into proper perspective. You know, 3 fat boys from Dallas did a pretty amazing thing to the silver market, but nothing compared to what the largest insurance companies and endowments and pension plans in the world will almost necessarily have to do over the next 5 years. I see the need for a behavioral change among individual investors, which would mean that I see individual investors abandoning the course of action that they've adopted over the last 40 years. I think one savings class for individual investors needs to be a medium of exchange that's simultaneously a store of value, which is to say silver or gold. I want to see real rather than fiat liquidity in individual portfolios. And I think that the silver squeeze was very useful in that it taught 1 million young people that they need to have an asset in their portfolio that isn't simultaneously somebody else's liability. That is classical money, which is silver. But the other side of the silver squeeze, I think, will make more impact on the price, which is to say very large institutional investors. Let's look at Norges Bank, Sovereign Wealth Fund of Norway. Their net asset value is now well over $1 trillion. And their holdings of precious metals and precious metals related assets are, to my knowledge, 0. If Norges Bank were to allocate 3% of their assets to precious metals, that would generate, by my calculation, about $30 billion worth of buying. That's the stuff of the silver squeeze. That's $30 billion worth of buying from one motivated buyer. Extend that to Abu Dhabi Investment Corporation, to CITIC, to Kingdom Holdings for Saudi Arabia, to the Stanford University Endowment, to the largest insurance companies in the world. and you understand the probability of a quantum increase in demand for precious metals as a consequence of disintermediation out of debt instruments, where these largest institutions of the world are 40% invested. That's the silver squeeze that I see.